Hey guys, welcome to another episode of the market updates, right? So just to provide some context of the market first, right? How has the market performed actually since August? Okay, so if you guys recall from the previous episodes, right, of the market updates, we can see here that on the daily chart, right, SPY representing the S&P 500 stocks in the US market, right? So we can see that since the massive dump on the 5th of August, right? So this was about 2 weeks before, till today, as of the time of recording, right, on 19th of August 2024, we can see that there's actually been a very massive rise in the market overall. Right, so bear in mind here, you can see that at the lowest, right, the market actually opened at about 510, 511, right, 2 weeks ago. And of course, for the session itself, it closed quite strongly, right? And subsequently, along the weeks, right, in the past 2 weeks, okay, except this very red day, right, on 7th of August, and just a slightly red day on last week, Monday, 12th of August, right, we can see that generally the market has been on a very, very bullish trend, right, going from about 511 to about 554, right? So not only that, we can also see this crossover, right, between the 5 EMA and also the 20 EMA. Okay, so we always say that when the shorter term EMA actually crosses above the shorter term EMA, right, so that's a confirmation, right, of a bullish trend. So the overall market, right, or at least in terms of this few candles, it has actually been very bullish, right? It has gone actually way high. And right now, right, these candles here are hovering around the VWAP, right? This blue trend line here, the VWAP. So we remains to be see how things are, right, along this week. Okay, so just some updates about what's going to happen in this week as well, right? So, first of all, we have the Jackson Hole Symposium that's going to happen on Friday, right? So, this is where the Federal Reserve Chairman Jerome Powell, right, will be speaking, and we will be paying close attention to what he says about the interest rate move, right, in the next month. Okay, so we have about 1 month to go, right? So about 17, 18 of September, right? That's about 2 months later. This Federal Reserve is going to announce the next move on the interest rate. Okay, so I would say largely the market has already priced in an interest rate cut, right? So right now we are around above 5% interest rate. Okay, since it started rising around late 2022, right? So around late 2021, actually, right? So this was to combat the high inflation. Okay, and this week itself, he'll probably be giving clues, right, as to how interest rates will be moving, and we could expect some volatility, right, in the stock market, depending on what he says. Okay, so if it's leaning towards the tendency to cut interest rates, right, then the market may actually react positively. If he says that they are still uncertain, still waiting, then there's a chance, right, the market may dump after receiving this news. Okay, so nothing can be confirmed now, right? You're just saying that it's a chance that they're going to cut the interest rate. Okay, so it could be about a quarter percentage, right, or 0.25%. So that could bring it down to about 5 or close to 4+%. Okay, and of course the projection is, right, by the end of next year, 2025, the interest rate could reach about 4 or even at 4%. Okay, so that would be the case for the interest rate right now. Just some bit of a background information, right? So for interest rate, we say that if you look at it from the economic side, right, typically the central bank will want to actually curb high inflation. So the standard target inflation rate is about 2 to 3%, right, for the different central banks. And what we saw around late 2021, 2022, right, is that coming to the year after the COVID situation and the lockdown periods, we have inflation going very high, right, to as high as 9% at one point. And this was way above the central bank's target. Okay, so in order to actually curb the high inflation, the central bank had to increase the interest rate, right? So interest rate, we take it as a borrowing cost. So once you make it more expensive for the households, the consumers, and the firms to borrow money, right, they are going to be less likely to borrow large amounts, right, to finance whatever big purchases. And we want just that. Okay? We don't want these groups of buyers, right, whether from the corporate side or from the households, to buy as aggressively as they did during the shutdown of the COVID period, because we want inflation to come down, right? So when people are buying very aggressively, there's more demand on the resources, and there's a chance that the cost is going to rise because the firms now will face very limited resources available, right? Because everything, the resources will be more expensive given the higher demand. So firms have to pass on the higher prices. Okay, so in order to reduce spending, right, we have to curb the spending through high inflation, higher interest rate. Okay, so in that case, the interest rate had to be increased, right, to curb the inflation. Okay, so that's just some background, right? So with that coming in now, right, once we see some of the economic figures, right, the inflation figures are actually getting quite good, right, quite in line, and we are seeing it coming down to maybe about 3+% in the recent period. Okay, so it's not still reaching the target exactly, right, but it's way lower compared to what we had during the post-COVID period. Okay, so that's quite a good news, right? A welcoming news to the investors, right? And so on. Okay, if they are looking forward to interest rate cuts. Okay, so apart from the Jackson Hole Symposium this week itself, right? We also have the reports, right, of Goldman Sachs reducing the odds of the US slipping into a recession, right, in the next 12 months to 20% from 25%. Okay, so they have looked at the different interest rate, no, the different economic data, right, and see that the chances of a recession has also decreased, right, in this case. Okay, so from the central bank's perspective, it is not just about inflation that is important, right? It is also concerned about the state of the economy, right? So it could look at the unemployment figures, right, which has actually jumped in July, right? So it prompted uh, people to fear that there could be a higher chance of recession, right? Because with more jobs, more people looking for jobs, more people out of jobs, right? There's a tendency that economy wasn't doing as well. Okay, but now that looking at the whole picture, right, they see that it is quite likely that recession is not going to happen, right? So this would be a welcoming news as well. Okay, because for the central bank, when they do what we call a tightening of the monetary policy, right, that means they raise the interest rates. They also do not want the economic growth rate to come down. Okay, because when you curb spending, when you make people spend less, right, there's also this dampening effect on the economic growth. Okay, so we don't want that while trying to curb inflation, right? So now that the jobs figures, right, the economic growth rate, they all seem quite healthy. It is quite likely that the policy is not doing that much damage, right? And with that, we are looking forward to see whether the central bank is going to cut the interest rate soon. Okay, so we can see that stocks such as Tesla, right, have largely moved quite in line with the overall market, right? You can see that following the massive dump on 5th of August, Monday, right, it has generally been on an upward trend. Although in the case of Tesla, it hasn't actually recovered quite as strongly as SPY, right? You can see that it's still hovering around the 216, right, range. Though on Friday itself, right, if we look at the 15-minute candle on Friday, what's interesting is that at the open, okay, Tesla actually had some sort of a dump, right, in the pre-market. So from about 215, actually dropped all the way to about 210. Okay, and in the opening of the market, right, it opened at about 211, right, and I remember looking at this, right, on the way back home, and can see here that it actually opened at around 211, 210, and it actually rose very strongly to about 217 in the first 15 minutes. Okay, so this was a very, very strong green candle, right, in the first 15 minutes alone. And Tesla continued pumping, right, until it reached close to 220. So probably 220 is a very strong resistance point, right? And it couldn't break through. So it actually started to dump, right? And it went all the way back to about 214 at the lowest during the session. Although later on it started to climb again to about 217 to 18, right? But it never broke 220 during the day itself. Okay, so you can see that for here, this was actually quite a strong move, right? Upwards, and then later on coming downwards as well. Okay, and in the 15-minute candle, we can see that post market, right? This was the post market. The green trend line, which is the 5 EMA, actually crossed below the 20 EMA. Okay, so there was a very sharp move down, right? And it came to about 212 again, right? Post market. Okay, so right now it is about 6 p.m. right on Monday, 19th of August. The pre-market is open right now for tonight's session. So it remains to be seen whether the market can continue the trend upwards, right? However, one big catalyst will be Friday, right? So until Friday itself, it could be very volatile, right? Because everyone's waiting to see how the central bank is going to announce their policy move, right? The interest rate policy in September. Okay, so this will be the rough update for the market for this week. Okay, so all the best, right, in your trades this week, and I'll see you guys in the upcoming videos over the next few days. Cheers.